3 out of every 1,000 deposits ever become producing mines. It's a harsh reality, but it's the truth. Mining is a profession. It requires people skills such as leadership, charisma, networking expertise, the ability to raise funds, assemble a team, deal with local authorities, master budgeting, understand commodity cycles, know how to automate and create modern business procedures, and it ultimately requires having courage, commercial sense, passion, and a contrarian outlook. That's why looking for an entrepreneur who possesses these skills is the first part of the due diligence period that you must conduct in order to capitalize on natural resource wealth. It's easier than you think. Success leaves clues, as Tony Robbins says. First quantum, first majestic. One man is behind the mega success stories of these billion-dollar businesses, Mr. Keith Neumeyer. His newest billion-dollar candidate is First Mining Finance, the only mineral bank in the Northern Hemisphere. He has also taken sizable positions with Zinc One, Silver One. Keith has made ordinary investors millions of dollars. He is the millionaire maker. His newest venture could be your ticket to wealth. Go to wealthresearchgroup.com/Keith2017 for an in-depth breakdown of the intrinsic values of his companies. Welcome to the Titans of Industry show at wealthresearchgroup.com. Last week we had a monster interview with the person many people consider as the best institutional investor in natural resources, Mr. Frank Holmes. Make sure you catch that for sure. Throughout our interview, Frank stressed the fact that grades, the resource base, the economics, the jurisdictions, everything like that is important, but at the end of the day, it's people, a uniquely rare breed of them that can turn minerals in the ground into minerals in your hand. And today I'm speaking with, no doubt, a future Hall of Famer of the resource sector. He's already built $2 billion companies from scratch. First Quantum, which is a behemoth copper producer in Africa, and of course the second largest silver producer in Mexico, First Majestic Silver, probably one of the purest grade silver producers in the world. With even the central banks of Switzerland investing in it last year, among other major institutions like Vanguard Group, the largest mutual fund in the world, Prudential, Deutsche Bank, and many ETFs. Today, we focus on, we have Keith on, Keith Neumeyer, Mr. Keith Neumeyer, to discuss his third company, First Mining Finance, which was founded in April of 2015, has grown from a $36 million IPO into a $300+ million company today. Keith, thank you for coming on and taking the time.
Hey, it's nice chatting with you again, Leor.
Hey, can I start by asking you to describe First Mining Finance in a few minutes to everyone with regards to the strategy, the criteria, the multiple exit strategies for monetizing the assets, and some of the short-term catalysts. So again, the strategy, criteria, multiple exit strategies for monetizing, and then the short-term catalyst for 2017, 2018.
Well, Leor, I'm not sure if I can do that in a couple of minutes. You basically asked me to describe the entire business plan of First Mining Finance in 2 minutes, and I think that would be impossible to do. I set the stage to build this company back in 2013 and 2014. And, because of the valuations that I was experiencing, or we were experiencing as investors in this mining space, and, we were seeing companies that had spent, tens of millions of dollars on developing, good assets in the ground, and all of a sudden their market caps became, 80 or 90% of what they were at their peaks, and they became unfinanceable and quite, not liked by the marketplace, and many of them were very close to bankruptcy, and we stepped in and convinced the management teams of many of these companies to be merged or to be acquired by ourselves. And our technical staff looked at the entire mining space. We focused on the Western Hemisphere, so North and South America. We weren't focusing on any specific metal. or any specific country. We're just looking at the financial dynamics of the ounces in the ground, the grades, the quality of the ounces, their jurisdiction of the ounces, how easily permittable they could be. Are they potential mines, or will they become mines sometime within a reasonable period of time? So there's a lot of questions to put at one asset, and we found that the Canadian gold assets really fell out of the whole mixture of companies that we were looking at. And jurisdiction was obviously key. Ontario, Quebec, Newfoundland are some of the easiest places to be mining. And, the grades also, are turned out to be, very good. And the ounces, the value of the ounces, or what they were actually trading at, were sub $10 an ounce in many cases, which we found quite surprising. So we decided to put together a list of target companies, and we identified, really about 10 key companies. And then over the next 13 months, we acquired 8 companies. And quite frankly, I've never seen a company buy 8 companies in just over a year in my career. So I think we pulled off quite the achievement. And most interestingly enough, 6 of the 8 companies that we ended up buying were in our top 10 target list. So we're pretty pleased with that. And we bought some fantastic projects. I think, the Springpole project is the largest undeveloped gold project in Canada, and is held by us. Goldlund is a very, it was always in a private company. It was never in a public company. So it's not a well understood asset. We drilled 100 holes there. We've news released about 49, I believe, to date. And the results are just coming out fantastic. So then we'll be drilling at all the other key projects as well throughout the year, Hope Brook and Cameron. And early in the year, we drilled on Pickle Crow. And so today, First Mining Finance owns 25 projects and controls in the top core assets, the Canadian assets, around 13 million ounces of gold currently. And we're looking at developing more ounces over the next several months and couple of years.
Okay, so basically, this is a very unique type of model. The way I see it, one, there must be a brutal bear market in order for undercapitalized companies or mismanaged companies or just companies with bad timing to be on the brink of bankruptcy, for you to buy gold ounces in the ground for $10. And then on the flip side, you need to have the pool and the following to be raising money in the worst period ever, like in April of 2015 when the company was launched. Would you say that another First Mining Finance cannot be created in this day and age, in the cycle, for at least until the market becomes very, very sold off again?
Well, it depends on what you're willing to pay for gold in the ground. We had a focus of buying ounces in the ground for less than $10 an ounce. And, people can go to our website and look at the PowerPoint, and we show each acquisition and how much was paid per ounce for each acquisition. And it's quite astounding that we were able to accomplish that. And, it just goes to show you how distressed the market is. And no, it could not be duplicated. What First Mining did during that period of time simply could not be duplicated. But if you want to pay $50, $60, $70 an ounce, I suppose, if you got enough money, you could maybe do it. But, we've accumulated, I think, the best portfolio of gold development projects there is in Canada, and of any publicly traded company in the world. There's not a portfolio that even compares to ours. So I'm talking about the junior space, obviously. So, I think the management should be commended for what they've accomplished, and we should be very proud for what we've accomplished. But now the focus is quite different. Back then, it was cheaper to buy ounces in the ground than it was to drill ounces. So today we're drilling. And the focus is to continually develop these projects and de-risk them as much as possible and get them as close to production as we can in the next couple of years.
Okay, so now and I say that because I own shares, obviously, of the company. We have 25 properties overall, and they're prioritized into Tier 1, Tier 2, Tier 3 property. Let's focus on Tier 1, the Springpole project. Are you looking to create a producing mine out of it? What's the next stages for this one? Because it's a huge project. The ounces are there. what are you going to do going forward with this property?
Yeah, we'll continually de-risk it. We're in discussions with local groups that live in the region and government officials and so on, and we want to start the permitting process. We've actually just hired an expert in this field of permitting who's done permitting of similar projects in Canada or in Ontario, and he's just joined us in the last month. So we're very, very focused on getting permits in place to bring Springpole into production. We've also did some drilling early in the year, and we've been doing metallurgical studies on the core to improve the mill. The previous preliminary economic assessment was designed around a smaller processing facility, and the recoveries were in the 81% range. We think we can actually get better recoveries, and we think we can have better economics. And also, the prior PA was done when the U.S. dollar was par to the Canadian dollar, and now everyone knows the Canadian dollar is about 30% lower. So the cost to produce an ounce of gold obviously will be much lower, and also don't forget oil prices are much lower today as well. So there's a number of inputs that were used in the previous economic study that are quite simply just different today. So we think that the economics are even better today than they were back then. So, investors can look for the company to re-release a brand new preliminary economic assessment later this year that'll show even more robust economics than currently is public, and people can look at those economics on our website. If you have any questions, feel free to ask me.
Well, Keith, before we started the interview, you and me, we went over the Springpole numbers, and that project alone is worth more than the market cap of the entire company right now. So it's very unique times, and I think the big thing here was the GDXJ rebalancing. How much of the company was GDXJ owning? I mean, geez, the bottom was set at 57 cents on the 16th of June. The company shot up, on Monday, straight up. It's over 70 cents now. You raised money not too long ago at 80 cents. Are you completely funded for your objectives for the next few years? And do you think this GDXJ rebalancing is basically one of the last opportunities to snag shares below $1?
Well, just going back to the evaluation of Springpole, if you go to the website, you see a value there, a post-tax NPV of $760 million with a 0% discount, and the market cap of the company is around $250 million US. So just Springpole alone is valued at approximately 3 times the company's current market cap. So, that doesn't include Goldline, which is a huge project, and Cameron and Holbrook and, the rest of the company's portfolio. So there's a lot of hidden value in the shares that don't quite honestly show up in the share price. And, it's partly to do with the GDXJ, but it's partly to do, the mining sector is going through a little bit of a rough time right now, with the NASDAQ hitting new highs and everyone's, chasing the FANG stocks and, the high-tech stocks in the United States, and everyone's making a lot of money doing it. So, as long as that continually happens, unfortunately, the focus it tends to be outside of the mining sector, which creates value for those people who are patient and then want to pick good companies. But, going to the GDXJ, I've seen the GDXJ now buy First Majestic Silver 3 times and sell it twice. We're very familiar with how they trade the stock. It makes very little sense because it's all its base is on the value of their fund, and they buy and sell stock on a daily basis. So, just to rebalance. So they're rebalancing every single day. But what happened in this particular rebalancing, which they do every quarter, is they do tweaking of the index. And this particular time, there was quite a large tweak. It's the largest ever they've done, whereby they actually decided to up the value or allow the value of mining companies that they would buy. The GDXJ was always meant to be a junior index, but they ran out of junior stocks to buy. They had already owned about 16% of First Mining Finance, which is a huge amount of stock. It's way too much for one fund to own. And they were owning similar sizes and in a variety of about 20 other mining companies they own between 15 and 18% of. So it became very, very unhealthy. So what they had to do is they decided to liquidate 50% of their holdings of that group of companies to raise enough capital to go and buy larger mining companies that had higher market caps, which included First Majestic Silver in this case. So they were selling First Mining, and then they reduced their position down to about 8%, which created quite the liquidity event. And everyone knows what happened on June 19th. The stock traded about, or I think it was June the 16th, pardon me, it traded on 90 million shares that day. So, that's a lot of stock. And a lot of that stock is double printed. So, because it's sold and then rebought and so on. So the 90 million shares, the true volume isn't quite that high. But nevertheless, it's a huge volume day, and it got knocked down from $1 level or $1.10 level in April when the news hit the wire originally, and it was sold all the way down, as you said, just previously to 57, 58 cents where the trade took place. And the stock had a nice rebound up to 75, 77 cents last week, and today with gold correcting a little bit, it's been a little bit weaker today in the 70, 71 cent range.
Sure. And the important thing to see here, and that's what Rick Rule told one of my colleagues just a few days ago, is that what the GDXJ did was basically they created liquidity for the majors at the expense of the juniors, and that's going forward pretty healthy for the sector because of merger activity, and now the majors will have some more cash to create deals. Do you see this as something that's beneficial for First Mining Finance and the way that you want to unlock some value in the properties that you have?
It'd be interesting to see over time whether Rick is actually right in his thesis. He is right on, in theory for sure. I would agree with his statements. But, the mining sector is the senior mining sector is not exactly made up of an aggressive group of individuals. There's a few exceptions, obviously, but in the most part, that's not the case. And, the majors tend to buy the juniors, in a running market when gold is up, substantially and there's an excitement on the street, and then the majors come in and buy some of the juniors. And they, quite frankly, they do it at the wrong time. They should be coming in distressed environments like First Mining did in 2014 and 2015. The assets that we're able to accumulate should have all been bought by majors at the time. But and we were actually commented to by some of the majors, and we were receiving comments after the fact by, we were looking at that asset, and we loved it, but we just couldn't move as quickly as you guys. Congratulations on what you achieved, and so on and so forth. And so as I said, it'll take time for that whole thesis to come to reality, but quite honestly, I think the majors are more driven by greed more than anything.
In the past week, doing research on all of the GDXJ components, we found that First Mining Finance was the #1 company to watch. And during this week, you graduated to the TSX venture. Instead of the TSX venture, you graduated to the TSX in Toronto. How does that help the company?
Well, several institutions can't invest in junior stocks or junior companies that are just simply trading on the venture exchange. So it opens up a whole group of funds that would otherwise not, be able to buy us. And also, it's a more credible market, obviously. So you just simply open up the company to a broader group of investors, and from a regulatory standpoint, it is easier for a public company because you're no longer treated as a junior company, so the regulatory environment tends to be somewhat easier to deal with.
Keith, quick update on two companies that you back heavily, Silver One and Zinc One, please.
No, for sure, yeah, no problem at all. My two full-time jobs. Obviously, I'm the CEO and president of First Majestic Silver, and that takes up virtually 100% of my time. But My second love is First Mining Finance, which I do spend time obviously dealing with the macro stuff. We've got a couple of great individuals who manage the day-to-day, and I'm very pleased that they've had the success. We've actually hired a whole group of professionals, expert in several different fields in mining, experience in Ontario and in Quebec and in Newfoundland, who are advancing all those assets. So I'm pretty pleased with the team that we've been able to build out at First Mining Finance. And in the case of Silver One, First Mining Finance spun out 3 of its silver projects. That team led by Greg Crow, who's a great guy, a lot of experience in mining, wanted to build a silver exploration company, which I was happy to work with them on. I became an investor, and we agreed, or First Mining agreed to sell them those projects for stock. So First Mining's a shareholder. I'm personally a shareholder, and they've quite excitingly, I think that what's really become core to them is their Candelaria project, and I think that over time there'll be news coming out on that project, and they're trying to permit drilling currently, and hopefully in the next month or two there'll be news releasing permits for that drilling program. But that Candelaria has got over 100 million ounces of silver defined in the ground, and we believe, the technical guys that have looked at it believe that it could be in production within the next 2 to 3 years, and that's something that has advanced that company much more quickly than I thought it was going to be advanced. And the company is now very much focused on Nevada and silver projects in Nevada. And I know they got their eyes on some other pretty interesting acquisitions. So I'm sitting on the edge of my seat waiting for them to be successful on some of these other acquisitions they're working on. So time will tell, but there's a great group of guys there. And Zinc One is another interesting company, led by Jim Walchuk, who is ex-Barrick mining GM, and he's a mine builder. This guy wants to build a mine, and this project, my technical guys, led by Raul Diaz, who's on the board, he said to me specifically that he thinks that this zinc project that they bought in Peru is the best undeveloped zinc project in the world. Now, that sounds like a pretty aggressive statement, but I'm being honest, and he actually did say that, and of course there's risk, and only time will tell if he's right. But just the fact that a technical individual of his caliber would say that about this asset excites me a lot. And part of the management team is going down this week, and they're working with the community. They're trying to put permits in place right now. They hope to have permits in place in the next couple of months to start drilling. And the grades here are just crazy. You have plus 20% zinc grades in the ore, and this mineralized structure appears to go on for several kilometers, which has been underexplored and which needs drilling. And Jim is focused on getting this thing into production, and he has told me that he thinks that it can be in production within the next 2 years, likely for sure, but if not, at least 3 years. So 2 to 3 years of production for Zinc One and Silver One, and that's where I like to put investments into companies. I like to buy companies that have real assets that are going to actually bring them into production to create real wealth. And I think that's important for investors to look at.
Lastly, do you think we've hit peak gold or peak silver?
Well, it's a good question. I would say peak silver is probably more likely, but we've had 5 or 6 years of pretty dismal investment in mining. So First Majestic's mines, I'm very close to them, obviously, are actually producing less silver today than they did a couple of years ago. And that's a result of lack of investment in exploration and development. If you're not doing underground tunneling to find the ore, to develop the ore, to bring it to surface, you're not going to be increasing production. And development is really the most costly thing there is for a mining company. It's cost tens of millions of dollars a year. Actually, First Majestic spends, I think this year, $56 million on development. So, that's a good chunk of capital. It's about half of our investment that is going into development. And you need to build these underground tunnels to bring this ore to surface and get it into the mill and produce ounces of silver and gold. So, let's say hypothetically that we get back into a better environment, where we have north of $20 or north of $25 silver and north of $1,300 or north of $1,500 gold, and the miners start to get, more cash flow coming into the business. The question is, will the extra investment that these mining companies will obviously do, will it increase gold or silver production? Time will tell. But I think that, as I said just earlier in my statement, that I think silver is the more problematic metal. We're only mining 9 ounces of silver for every 1 ounce of gold, and we're trading at north of 70 to 1. So that ratio makes no sense, and that ratio tells me that there's a huge supply deficit, and consumption every single year is going up while mine supply is dropping.
Wealth Research Group has created a thorough and detailed analysis of First Mining Finance at wealthresearchgroup.com/gold 2017. And FYI, if you think this interview is biased in favor of Keith Neumeyer and First Mining Finance, it's because it is. I want you to have a chance to align yourselves with the ultimate best. Keith, a pleasure as always. Thank you for taking the time to come on the show today.
Well, it's always nice chatting with you.
Thank you.